Hello my fellow investors and welcome back to the earnings report analysis video. Today guys, let's do analysis on the earnings on Tyson Foods. We just did a stock analysis on this yesterday, so now it's a good time to see the earnings report and see if maybe our assumptions, my assumptions essentially, were in line with what we're seeing with the earnings report as well as guidance. So with that said, let's get started with this analysis. Now before we actually get started with this guys, I would actually like to point something out that I realized this after I recorded my video yesterday, but Tyson Foods CFO was arrested. It's kind of hilarious though, because John Randall Tyson charged with public intoxication and trespassing after he was found asleep in woman's bed. So apparently this guy got drunk and trespassed into a house and fell asleep at a woman's, a random woman's bed or something like that. That's kind of hilarious, though this doesn't really have anything to do with the company's fundamentals. I'm just mentioning it because now this is a whole thing with the board, and this is going to cause a little bit of unrest and just uncertainty as to who they're going to put in as their new CFO. Just something I figured to put in here just because I figured it was kind of important to mention. But with that said, let's come into guys the earnings report summary in Seeking Alpha. We can see that the EPS normalized actual came in at $1.63, which was a miss by 9 cents. EPS gap actual was $1.50, a miss by 23 cents. So right then and there, both a miss in regards to analyst estimates. Revenue actual came in at $13.74 billion, which was a beat by $251.14 million. So all in all, as you can clearly see, they missed on the EPS, on both EPS. Yeah, that made the stock kind of go in a specific way. We'll take a look at this in just 1 second. But that's essentially the summary when it comes to their earnings. Now coming into their actual earnings report. Like always, remember, I will have this earnings report in the description below if you guys would like to read it. So let's analyze this, guys. We got here, well, they're starting off with their numbers. Sales, 2022, 2021. Let's compare these two. So sales for 2021, guys, it was 12.8 billion. Sales in 2022, it went up to 13.74 billion. That's pretty good. Net income, 2021, $1.36 billion. 2022, guys, $537 million. That was a massive decrease. Now that's interesting because take a look at this. In the fourth quarter, it was a decrease, but on the 12 months ended, it was actually an increase, going from $3.1 billion to $3.25 billion. So again, fairly interesting, and that also comes into effect with the operating income as well. As you can see, 2021 it was 1.91 billion. 2022 it was 766 million. However, 12 months ended 4.4 billion to 4.41 billion. So, you know, I guess they did a little bit better in the 12 month ended, but you know, it's still a decrease nonetheless. Taking a look at a few highlights, we got the fiscal 2022 highlights. GAAP EPS of $8.92, up 7% from the prior year. Adjusted EPS of $8.73, up 5% from the prior year. Now remember guys, when we saw Seeking Alpha, they did not meet analyst estimates. Even though the GAAP EPS came in significantly higher than that of the last year, analysts didn't necessarily like that, so because they missed it, you know, that caused some issues there. But as you can see, they are still doing good when it comes to year over year on GAAP EPS. GAAP operating income of $4.41 billion, up slightly from the prior year. Adjusted operating income of $4.414 billion, up 3% from the prior year. Total company GAAP operating margin and adjusted operating margin of 8.3%. Repurchase, guys, 8.2 million shares for $702 million. That's really good. And on top of that, look at this, reduced total debt by approximately $1 billion. So that's actually really solid to hear. Fourth quarter highlights are actually a little bit worse. GAAP EPS of $1.50, down 60% from the prior year. Adjusted EPS of $1.63, down 29% from the prior year. GAAP operating income of $766 million, down 60% from the prior year. Adjusted operating income of $823 million, down 29% from the prior year. Yikes, guys. That's really bad. You can see on the fourth quarter, everything just collapsed. So really bad to see. Total company GAAP operating margin of 5.6%, adjusted operating margin of 6%, liquidity of $3.3 billion in October 1st, 2022. Now let's actually read a couple of the comments from the CEO, and it's actually just these two paragraphs, and we got here. We delivered our record sales and earnings for the full year, which was supported by our diverse portfolio and continued strength in consumer demands for protein, said Donnie King, President and CEO of Tyson Foods. Our results were supported by historically strong operations in our beef segment and improved performance in our chicken segment. We also experienced share gains in both our food service focused 6 categories and retail core business lines, which include our Tyson, Jimmy Dean, Hillshire Farms, and Ballpark iconic brands. Our productivity program, announced 1 year ago and designed to deliver more than $1 billion in recurring annual savings by the end of 2024, was accelerated ahead of schedule and is now expected to be achieved by the end of fiscal year 2023. The focus of this plan includes operational and functional excellence, digital solutions, and automation and advanced technologies. So as you can clearly see, they have been doing very, very good, at least on the fiscal year side, not so much the quarter. The quarter was very, very poor. However, fiscal year was actually looking very, very good. And as value investors, guys, that is what we like to see. We don't want to see like quarters or like months, right? We want to see years. We want to see decades, right? We want to see several years down the line in order to make a good assumption for a good, stable company. Now, because of the fact that their earnings just weren't in line with analyst estimates, well, Tyson Foods today fell almost 4%, $2.58, for an ending price on the trading day of $64.83. Aftermarket, it went up slightly to $65, but is still fairly low. On the 1 year, guys, remember that they're still down 23%. On the year to date, they're down 26.16%. And take a look at this 52-week range, because we are now at the 52-week low for this company. Yesterday, we weren't on the 52-week low. We were on the lower side, but we weren't at the 52-week lows, guys. We're what, like $2 away from this 52-week low, so we're essentially at the 52-week lows. And coming back into the calculator, guys, specifically the discounted free cash flow part, y'all remember, I was putting this company, guys, at a complete buy with my assumptions of 5, 6, and 7% for the revenue growth and a predicted share buyback of 1, 2, and 3% respectively as well. And there was only one number that didn't fall in line with saying that this was a buy. That was at the lowest assumption, the 15% margin of safety. But today, guys, current share price of $65, we are essentially there, which is hilarious to see. Now, do I want to change anything here? I would actually would. So let's actually increase these revenues by like 1% each, because I'm fairly curious what would happen. So let's put the 6, 7, and 8%. And let's also increase the projected share buyback by 1% as well. So 2, 3, and 4%. Guys, even though the change wasn't really that big, it's now telling me that it is still looking like a pretty good buy overall. I mean, and even the margin between the lowest assumption, the highest margin of safety, grew even bigger now. So as it currently stands, guys, this company, 52-week lows, it is looking like a pretty good buy today. And now a quick overview on their earnings, guys. Take a look at this. Net income increased by 72%. Cash flow increased by 72%. Revenue increased by almost 23%. Assets minus liabilities, guys, it is continuously increasing. Cash flow minus liabilities reaching the lowest point 3 years ago, and they have been getting closer and closer to zero ever since. Shares outstanding, they have been decreasing, or if not, remaining the same. And cash and equivalents currently hold $1.1 billion. And of course, seeing that the share price did go down a little bit today, putting in $5,725, this is an annual dividends, guys, of $162.50. So all in all, my assumptions for Tyson Foods are pretty much the same. I still think it is a pretty good buy today. Their fundamentals aren't telling me that this company is at risk for anything, so I think I might be a pretty good buy today. But remember, this is not financial advice. Please do your own due diligence. Every investment is the present value of all future cash flow. Have these calculators for free, guys, and that pretty much does it for this video. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow me on my new tech sites, a link in the description below. So with that said, peace out, and we'll see you all in the next video.